welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. Pharma stocks dragged the Nifty into negative. The index trades below the 10,300 mark. It's a strong second quarter for Tata Motors. Jaguar Land Rover post EBITDA margins of 11.8%, beating street estimates. Aurobindo Pharma and HPCL are the key Nifty companies reporting their earnings today. And Petronet LNG gains as much as 6% post a strong second quarter.
Well, that could well take the mantle of being the stock of the day, if not for Pidilite. But anyway, let's talk about the markets first. And yeah, again, a flat day of trade. Today, remember, we're talking about how the VIX hasn't really done too much either. And therefore, maybe the broader markets too aren't too volatile. Let's bring up the mid caps and the small caps and the advanced decline ratio too on the screen. I doubt that there'll be too much of a dramatic movement. No, the small caps are lying flat, mid caps about 1/3 of a percent. I would believe even Stevens, the advanced decline ratio, unless there is something really exceptional, yeah, they're about even Stevens. So no great changes out there in the advanced decline ratio as well. Pull up the heat map and show you what's really moving around. It's some more red than green on the screen, but no big losers save for 2 or 3 heavyweights, which is ITC and ONGC, which are correcting, and Pharma is having a tough day. But what's bouncing back today? Bharti Airtel, Reliance Industries after many days. Remember, I was talking in the morning about there being a possibility of a bounce back in Reliance. Abhijit Pathak gave it as a strategy as well, and that stock has done reasonably well for itself. Lastly, just want to get the contributors played. Reliance should be top draw, or maybe ICICI Bank, but I would reckon Reliance is the top draw, followed by ICICI Bank. Yes, indeed. And then HUL and Asian Paints amongst the winners list, but being pulled down by what's happening to these two heavyweights, and in a small way to ONGC in the session today, which is in fact the top loser on the index. But Pradeep, what about the broader end of the spectrum?
What's interesting really that today I could find some few gainers moving up with good volume as well. So there is selling pressure still in mid cap and small cap spectrum, but also we have some winners here. To begin with, losers like GSFC following the poor numbers really. Reliance Capital continues to correct. There is no respite for this counter. It's trying to find a base in today's trade, and Mahanagar Gas would be yet another loser. This stock is also quoting close to the day's low, down 6% now. On the positive side, however, you have Tata Global Beverages. This is an interesting play in today's trade, while you saw ITC actually being the key contributor on the negative side. Tata Global has moved up by 4.5% now. Indian Bank is also interesting. This is one hot favorite of all the fundamental analysts. Whenever we ask them to pick one PSU mid-cap bank, Indian Bank is the most popular choice. And Saregama, among very small cap names, you have Saregama and MEP Infra, 2 stocks that I have picked up. These are just the representative ones. Actually, interestingly, there are quite a lot of small cap and some smaller mid cap stocks that traders are actually trying to pick up in today's session. Neeraj.
Indeed, very interesting names out there. You don't normally see the MEPs and the Saregamas of the world really feature in the top draw, frankly, but maybe the market lying a bit dormant, and that's adding to that. Anyways, before we move further though, Navneet Saluja, a quick check on what the derivative market is looking like.
It's not looking great at all, because we had a gap up opening, but the market could not sustain those opening gains today. And once again, there was a selling pressure which came about. If you go by the options data, what's that throwing about? In the morning session, at least in the first half, we were seeing the 10,400 put, seeing a lot of open interest addition. Now, what has happened in the second half? There has been unwinding there, and more addition has been seen for the 10,400 call strike. So once again, I think for the third or the fourth straight session, we are seeing more of call writing coming in for out of the money strikes. 10,500 as well as the 10,600 strikes so far have seen open interest addition coming about. Well, clearly the bank nifty is in focus, and that's managed to hold in green today. Today is the weekly options expiry day, and if you go by the range, it is suggesting that the expiry can take place in the range of 25,100 to about 25,400. And as you can see, the November futures, not only today, in the past few sessions we've been seeing there is a lot of OI OI buildup which has been seen for the Bank Nifty, and look at that, it's trading with a premium of almost over 100 points. Also want to highlight the India Volatility Index. Morning we had a gap up opening. India VIX was also down almost 6%. That's the intraday chart that's telling you that the India VIX is also off day's low. So currently it's trading lower by only 1%. Just two stocks I want to highlight. Pradeep's already spoken about Indian Bank, but that's the counter on the future side is also witnessing a lot of OI buildup. Look at that, 20% higher, telling you there are fresh long positions being seen there. The counter has also touched its fresh 52-week high. And Kadila Healthcare on the weaker side, fresh shots seen there, open interest up 15%. Remember, Credit Suisse has downgraded the counter today to neutral and also cut the target price to almost 465.
And pharma is under a bit of stress today, despite Taro moving up 15% in the session yesterday. On the show today, though, we talk markets and investment opportunities with Rajesh Kothari of AlfAccurate Advisors. A bit later on in the show, we decode the second quarter earnings of Capsite Infra Projects with its ED Rohit Katyal. We also discuss technicals with Jay Bala of cashthechaos.com. But move on to our guest, Rajesh Kothari of AlfAccurate, joins us right now on the show. Rajesh, good having you. Thanks so much for joining in. Just first, a quick check really. Every conversation with mutual fund managers suggests that money is coming in droves. Is the same thing happening with the PMS schemes as well, with your schemes as well?
Oh yeah, we have been seeing quite a strong inflows during last, I would say, that started I think 2 years back. And,
yeah, but is it continuing?
Yeah, it is continuing, and increasingly the ultra high net worth individual investors who till now were doing probably trading on their own and kind of leverage, they've understood basically the difference between investment and speculation. So yes, we are seeing good traction.
Chalo. Having said that, let's talk about what's happening with the markets currently and what are you doing. So since you're getting the money, but we're perched at new highs or almost at new highs really, are you selectively investing money right now? Because, and of course I'm guessing you have to, or are you sitting on the maximum permissible levels of cash that you would allow yourself?
Well, if investor who is coming money, putting money today, then we are investing money slowly. We are not putting all money at one go, unlike in mutual funds where you have to compulsorily get invested. So we have a liberty to remain in cash.
Yes.
And over a period of 2 to 3 months, we increase our invested levels. So we select the companies based on which current valuations and so on and so forth, and we start investing.
So what's the percentage of cash levels you're sitting on, and which are the sectors that you're looking to deploy that cash into?
So basically for new set of investors who are coming, say for example last 30 days or so, we are holding on about 40% kind of a cash levels.
Okay.
But for the existing investor, old investor, we are almost like 80, 90, 95% kind of invested levels. So that is as far as your first question goes.
Right.
The companies and sectors on which we are positive, for example specialty chemical. Now this is one segment we have been bullish from last almost I see 12-18 months, and we keep adding the names depending upon the strong business competitive advantage of those companies. Because the China, it is not a one-off factor, because there is a view on the market that China is like a one-off factor, and as the factories again reopen, the prices again will drop. But actually that's not the case, because even if the factories gets opened up, the cost curve will be different. And therefore many of the Indian businesses which have actually seen huge dumping from China, and although they were strong into chemistry, the engineering side of it, they were not able to make the product competitive in terms of the profitable. But that is no more the case, and we believe that this is going to be the sustainable long-term competitive advantage.
Just a counter question here. You're saying even if the factories reopen in China, let's say if the capacities which have been shut down, they reopen, still the Indian companies will have an edge, because there was that gap between demand and supply till now.
Of course, it varies from category to category, whether you are into dyes or whether you are into commodity chemicals, whether you are at a value-added side of chemical. But in general, yes, our view is that the cost curve is going to be higher for the Chinese companies, and therefore to that extent there is going to be a structural shift from China to India.
So where are you putting money within that chemical space? I mean, I'm not asking you to give me a recommendation of a buy or sell, but what do you have in your portfolios which you like or continue to like within the specialty chemical space, because it's a very large pocket? Yeah,
so I'm sure you must have seen our fact sheet, and we are holding for example Ashai Shangwang Chemicals, which is into specialty kind of a company. We are holding, for example, Balaji Amines, which is almost like a oligopolistic kind of a market. There are only 2 to 3 players in India into the amine side of it, whether you look at methyl amines, or there are many chemical what I would say downstream and upstream. So these are the few companies which we are holding. We are holding Navin Fluoro from quite a long time. So we keep identifying companies. All these companies, the names which I mentioned, most of them are like debt-free balance sheets with a 18 to 20% return on net worth, 20 to 30% return on capital employed, and very strong earnings growth of 20 to 30% over the next 3 to 4 years. and the valuations are still like, below 12, 13, 14 times. Unlike myths that, small caps and mid caps have gone up and they are expensive, but actually they are not. Many of them are still, available at a quite reasonable valuation.
That is true.
So, are you still buying more of the same with the new money which is flowing in, or because I think these commodity and chemical stocks you talked about, you have been one of the early movers into this segment. So, you have been holding on to these names for a long time.
True.
Anything else, the new sectors that probably you have started liking off late?
Nothing new. I think we, of course, we look by company, and nothing much new in terms of the sectoral exposure. But we keep identifying the new companies in the same sector, depending upon where is the inflection point from the earnings growth perspective. Because many of these companies, they have capacities, but the capacity utilization was running at around 40 to 50%, and that is now increasing to 60 to 70 to 80%. And as that happens, the operating leverage is going to play out very, very strongly. So specialty chemical is one of that example where operating leverage is going to be very strong over next 2 to 3 years.
Okay, so you'll still hold on to these stocks.
Yeah.
Yes. Are you taking a call on markets looking at the level that we see now, and there are concerns with regard to the crude appreciating? There could be some tightening, in terms of rates going up in India or US. There are all these fears, and bond yields, if you look at it, have already moved up by some 70-80 basis points over the last few quarters. So, are you really worried with where we are in terms of valuation? And accordingly, have you increased the proportion of cash, or are you willing to wait much longer than 2-3 months that you earlier indicated?
Well, I think we look at basically from the company's perspective and the valuations of those companies rather than looking into the broader market, because sometimes it gives you completely misleading indicator. Let me give you for example. Generally Street believes that Sensex earnings growth has been kind of a 2, 3, 4% in last 4-5 years. But actually, if you drill down the BSE 500 companies, the 1/3 of BSE 500 universe have reported earnings growth of 18%. Over last 3 years, 18% compounded over last 5 years, and 18% compounded over last 10 years. And I'm talking about a 1/3 of BSE 500. And this includes, the Lehman collapse, and this includes the demonetization. So there are many companies in India which are growing at 18-20% compounding. And if you look at the market cap growth of these companies over last 10 years, it has been exactly in line with earnings growth. So they are not actually overvalued. So let's not get carried away by the one Sensex number of 32,000 or Nifty 10,500 kind of thing. Actually, beyond a point, doesn't make much difference. If you think that companies which you can identify has a potential to grow 18 to 20%, and if you get it at a reasonable valuation of 12, 15, 18 times, I think you have still a decent money to be made over the next 3 years.
If I can ask you about, I don't know if you're at a liberty to talk about it or not, but if I can ask you about a couple of themes that I believe you guys bet on. One of them was Shankara Building Products, I presume.
Yeah.
I don't know if you still have the holding there or
yeah, we still
So, we spoke to the management recently, and he mentioned that his margins would probably grow by about 100 bips over the next couple of years, not more, and revenue growth of about 15%.
That's true.
CAGR. For the next 3.
That's true.
Okay, by the way, I'm just told the HPCL numbers are out as well. And Amara Raja too. Rajesh, just hold on to that thought, because I want to talk about Shankara, but maybe get some thoughts on some of these other numbers as well. Amara Raja, revenues down, EBITDA is marginally higher for Amara Raja. That stock should come up on your screen as well. And therefore, margins are, well, it's a surprise really. I think it's the other way around, quite frankly, but margins have jumped up a bit, and maybe that's why this one has shot up in trade, 6% higher, 724 and counting. So good going for Amara Raja for sure. But I was also told that HPCL numbers are out, so we should be getting them on the screen any moment.
Profit is actually, I think, below estimate.
So we have HPCL already?
So against, an expectation of 2,000 crore, it's 1,730 crores, which is a disappointment. But on the top line front, if you look at revenue, expectation was 53,200 crore, and we are at 54,100. So top line is better than estimate, but bottom line has disappointed, and you see the impact. GRM at $6.75 versus $5.12. So this is better. I don't know what was the estimate here in terms of GRM, if at all we
were expecting GRMs to come in at about $9.7 per barrel.
Then it's just 6 3/4.
It's been below, yeah. And even in the first quarter, it was 5.9, yeah.
Yeah, this seemingly is building like a trend because a bunch of companies have disappointed on the GRM front this quarter for sure. But yeah, this is not the greatest of quarters for HPCL. But as we've been talking about the last few days, don't look at HPCL from this quarter or from the crude oil perspective, because the deal in the offing that everybody's been talking about is probably the larger trigger. I would really be surprised if HPCL shows a really big sell-off post these numbers. There are larger games at play in this one. But let's wait and watch. You never know. You could be surprised on the other side as well. But these are HPCL numbers. The Nifty company, ho-hum. Rajesh, your thoughts? I mean, I'm not asking you to comment on the stock per se, but the numbers for HPCL or the oil and gas space at large?
Well, we are not holding much into oil and gas sector, so I think there are many other good companies to play on rather than because the increasing oil price is surely going to be one of the biggest concern for the market, because ability of the government to keep increasing oil price when inflation moves on the other end, we are not too sure. So
not even RIL?
No.
No, I mean, that doesn't surprise me. I don't know how many large portfolio schemes would be holding RIL. I mean, unless it is a dramatically large scheme, but otherwise, yeah,
no,
RIL.
The institutional holding was lower at the start of the year, and that's when the run-up started for
Reliance. Yeah, but it was mutual funds, and maybe, I don't know if too many portfolio management schemes which would be holding Reliance Industries. Yeah. I mean, I'll be surprised if there are too many, but you never know. I might be mistaken as well. But this is HPCL, and that one is just about trading flat. Amara Raja was the other one. Any thoughts there before we move on to Shankara Building? The battery companies, Exide, Amara Raja?
No, we are not holding any of them. No beyond.
Okay, fair call. Just stay on then. Let's just get a view on HPCL. It's Sudeep Anand of IDBI Capital with us on the show. Sudeep, thanks for joining in. What did you make of the numbers? The bottom line clearly below estimates.
Yeah, the numbers are below expectation. We were expecting somewhere around 23 billion rupees for this quarter, and the company has reported somewhere around 17.4 billion rupees. Even the EBITDA looks and the revenue looks lower than expectation. But if you see, even IOC had disappointed the result mainly because of the lower than expected the crude oil inventory and even the GRM. So we'll have to check for GRM for HPCL, but we were expecting somewhere around $8.5 per barrel. So, and also if you see, HPCL's most of the profit comes from your marketing side as well. So I think this quarter your marketing side also has disappointed.
This is kind of a trend if you look at other OMCs also. GRM has been below estimate. What do you think is the reason? I think there should be some common factor.
So GRM was lower than expectation because of your lower than expected your inventory gain, and but even IOC had mentioned that some of the inventory gain of last quarter, and even if crude oil price remains higher in this quarter, most of the gain will come in Q3. So I think the similar trend would be seeing for HPCL as well. However, we are looking at the EBITDA. EBITDA also looks lower than our expectation of 36 billion, and its EBITDA came at around 29 billion rupees.
If I heard you correctly, you also mentioned that marketing margins have also probably narrowed. As we understand the marketing, I mean, these companies are actually now free to price at market price, on a daily basis. If you could really explain how is that really calculated, and what would be then the reason behind marketing margin being narrower than expected?
So marketing margin, if you see, the company, all marketing companies are facing pressure, facing the competition from the private players, as these companies all Reliance and your SR is expanding its retail network. And these companies are losing market share, as well as your crude oil price is now moving upwards. So that is actually these companies are not able to pass on the entire benefit as of now. But as the government will cut down their excise duty, this company will again regain its market share, regain its marketing margin. But as of now, for the timing, I think we will see that your marketing margin for this company will remain under pressure.
Thanks for that, Sudeep. For joining us today. Samit Sarkar is also standing by. Samit, anything else that stood out for you?
The numbers were below estimates. Revenue, net profit, EBITDA, all below estimates. GRMs came in at 7.6 against an expectation of $9.7. Now, it's a big miss. So it could be because of the lower than expected inventory gains that would have come in this quarter. It's not only HPCL. Indian Oil also had come out with a weak set of numbers. There could be something on the marketing side. There could be more weakness because of some impact of GST. Now, Indian Oil had seen an impact of around 300 crores. So we'll have to wait and watch what would have been the impact on HPCL because of GST. Also, the EBITDA margins of the company, but EBITDA margins on the other hand were on expected lines of 6.1%, and analysts were also expecting something on that line. But if you see, the throughput also has been at 4.6 million metric tons, and the sales was at around 8.37 million metric tons. Both of these numbers were also below the analyst estimation. So that could be the reason why the numbers are off the analyst expectations in this quarter.
Thanks for that, Sumit. That's HPCL, of course, having discussed that enough. Just before taking final thoughts from Rajesh, we were actually on the topic of some retail stroke consumption names which may have looked attractive at the points of purchase but have run up significantly. Shankara being a case in point. Maybe there are a couple of other names as well. What's the compelling reason to hold on to these companies? Is it the growth numbers that might continue for the foreseeable future, or is it something else?
I think there are three things which are important. One is the size of opportunity, which is clearly is a very huge for companies like Shankara. You know, what is the current revenue of the Shankara is just about, I would say, 2,000 crores last year. And you know, they are opening new stores, 110 stores already, I think 110 plus now. So the size of opportunity is clearly a very, very huge opportunity. Second is very, very disciplined approach for growth. If you look at any retail player, it would be very, very difficult to get a retail player with a 18 to 20% return on net worth. Clearly, Shankara is 18 to 20% return on net worth story. And the third is most important, the valuations, while it looks higher on the nameplate basis, but actually if you look at it and if you look at keep the growth, over next 2 to 3 years, probably it will be 110, 120 crore, which is a very strong profit number for any retail company. 100 crores is a decent number over next 2 years or so. So I think it is still a good case to hold on to the company. Yes, valuations have run up, but I think it was mispriced, I would say, at the time of listing. So I think it is currently it is not cheap, but it is a growth stock, and I think it is a compounder from here on.
Any other multi-baggers or any other stocks that you are doing your research on where you would like to put your money?
There are many companies which you keep.
Your top 2 picks or top 3 picks?
Difficult to give stock specific things, but there are interesting opportunities in auto ancillaries. Okay. This is one space which we have been bullish from last so many years. Motherson is one of the examples which we are holding from almost last 8 years or so, and has been compounder for us. We have been looking at companies in specialty chemical companies like, for example, Balaji Amines, which we added some time back. Ashai Shongwong is the company which we have been bullish on. Again, these are very, very specialized, high specialized chemical companies. I think there are interesting opportunity in the pipe segment. For example, there are companies which are doing return on net worth of 20% plus, and available at below 10 times. So we are looking at that company. So keep watching our fact sheet. You'll find names in our fact sheet. And you can get it at still single digit P with a 20% growth and 150 crore plus net profit size. So we keep identifying companies. You're
talking about steel pipe companies supplying oil or some other pipe company?
No, pure is a DI pipe players kind of a opportunity, which are really more towards the water side of it, not irrigation side of story, but actually more water side of story. Where, for example, South India, they are growing strongly. If you look at next 3 years projects of government of South India, then water is one of the most important priority for the government. Okay. So there are many opportunities like that which we keep getting.
We'll do our research next time before you come and find out which company you're talking about, Rajesh.
Yeah, great having you, Rajesh. Thanks so much for joining in today and giving us your perspective.
Thanks.
Well, that's Rajesh Kothari of Alpha Accurate Advisors. But frankly, if you ask me, there could be a tussle between what could be the stock of the day. There could be Pidilite, it could be Petronet, but let's talk about Pidilite because the stock has gained the most in 5 months after a strong second quarter. The management is confident that things are returning to normal post the transition to GST and that it may widen its product mix if need be.
Well, clearly, I think we also spoke to the management today during the show, Trend Spotting, and they were sounding pretty bullish. And I think the only thing which has not performed well in the numbers was the industrial side of the business, Neeraj. That's where the EBIT growth has been lagging, and that speaks volume about where the capex has not been picking up on the industrial side. So overall, the numbers were definitely good performance in terms of top line. Even the operating performance was pretty good. So Pidilite has actually reacted positively to its numbers, and clearly it qualifies to be our stock of the day today.
Well, in fact, Navneet, speaking about the management, let's hear out what they had to say today.
See, we have seen a good transition to GST. Most of our channel partners, including distributor, retailers and customers, have adopted to GST, and things are becoming near normal.
All right, let's move on. India needs an infrastructure rally if it wants to grow at 8 to 10%. That's the word coming from the top bosses at Axis Capital. Listen in to what they had to tell Neeraj on the sidelines of the Axis Capital India 2020 Stars Conference.
I think there's been a change in the way people are seeing autos. It's a very good way to play consumers in India. It's a relatively inexpensive way to play it compared to staples. And there are all clean companies, good balance sheets, good return on capital. So, which is why auto sector is being re-rated. And so, people look at valuations as how it was compared to historical averages. It's not the right way to see it. So, good companies which we have in our conference as well. I mean, they might be expensive, but if you look at it as a way to play consumers in India, it's relatively a cheaper way to play it.
Yeah. Okay. Now, before I talk about insurance with you, Salil, Dharmesh, I just want to get this question to you. You're a man who's, and I've known you for a number of years now, you've tracked various cycles as well. Typically, companies and sectors and themes used to follow a cycle. Nowadays, what we've seen, there are a bunch of these sectors which don't really see too much of a trough because cycles are getting compressed as well, so to say. We don't have too long a down cycle, and with the fund flow coming in, the nature, it's being bought into. To your mind, here on, the next 3 years, the message that you're sending about this space, again, I know that you've gotten companies across the sphere, but what are the themes, what are the cycles that you believe will be the top of the pile over the course of the next 3 years? I'm not asking for 12 months or 6 months.
So I'll tell you one thing, as I said, these two events, GST and DMON, it's never happened in the history of India. So it's not the first time. So everything has been tested today. Even me with an experience of maybe 27 years, still don't know what is going to happen next, right?
Really?
Because nobody's seen that. Let's be very honest. Let's not be saying that, okay, we know what's going to happen next. But clearly 1 year before, somebody told me in the last conference that markets will be up 30%. Nobody would have believed me. So clearly cases that nobody knows. But the upside for India, as I said, is the half glass full, half glass empty. But all the benefits of DMON and GST are now going to flow in. India needs infrastructure, India needs power, India needs cement consumption. All of these are yet to happen. So what you've seen is just maybe a financial services rally and a consumption rally. But you're still going to see the big rally, which is of your main infrastructure, where the spending has to come if India has to grow at 8 to 10%. So all your infrastructure or power has to move. And that's what people are now trying to see, whether the time has come to go into the stocks. Like we had done a Dilip Bilcon IPO last year. It's up almost 4 to 5 times.
Yes.
And in the time when people thought nothing is happening in infra space. So clearly, if you have a good leader, good executor, people are ready to pay the valuations. And because there's a huge upside left, because a lot of things what I've discussed is yet to happen.
But is it time to do that, or is it very, very selective in these things?
It has to be selective.
Very, very
selective.
For
the leader, go for the best execution guy, because end of the day, execution is the king today.
Yeah.
So whoever is able to execute, like last few weeks back, we did a real estate QIP of 500 crores, and he got 3 or 4 times demand.
Yeah.
While the real estate sector, people think is in dumps. Yeah. So if selectively, everywhere people are looking to invest. So that's why the whole conference theme was get India in, because it's not I'm seeing a preference toward only a BFSI segment or a consumer. It's all across. And as you know, we have Sachin Jindal for the market interview. He's going to talk about his entire group, his commodities, cement, you're talking steel.
Yes.
Now, that's what even people are looking at. And JSW has done phenomenally well in the last 1 year.
Yeah.
So it beats me to understand what's going to move. That's why I'll not be over smart and try to go and play themes. I'd rather play individual stocks and see where the investments are coming. You're going to see investment coming in logistics space, infrastructure, waterways, railways, all of them. And don't forget, railways is also going to hit the IPO market soon.
Yeah.
So, and even the defense. So just imagine when I'm talking so many sectors opening up, this can guzzle a lot of money.
Yeah.
And the capex there is going to be huge. So the big India show is actually yet to happen.
If we look at the last 6 months, clearly the poster boy, nobody will deny it, in terms of new paper coming into the market has been insurance. Do you reckon over the next 6 to 9 or 12 odd months, it will continue to remain companies in the BFSI theme, or something new is coming up? Dharmesh referred to a couple of spaces. I don't know if those conversations are red hot right now.
So let's put it, the insurance space, the big daddies in insurance have kind of gone ahead and already hit the marketplace. So you do not expect the same quantum of supplies from the insurance side to come in. They will be, 10% dilution itself is a big guzzler. But keep in mind the fact that people who've done the 10% dilutions have to eventually get to 25%. So there will be paper which will come out from the insurance space, not maybe in the next 12 months, but clearly over the next 36 months time, it's bound to happen. But I think what we would see going ahead will be, some different kinds of the larger papers that one could see. So one area that we talked about, real estate. The outcome of the real estate side will also be some paper which will come out in the REITs form. And believe you me, the kind of companies that will hit using the REITs platform will really be the top-end developers, high-quality paper. It's a fantastic product. Globally, it's such a large product compared to equities market. So one can expect a bit of that coming out over the next 12 months' time. So I think that's an important aspect. He talked about energy and so on. So I think, again, we'll say renewables as a space is again an area wherein you will see some action. There's a lot of action happening on the ground in any case. So there will be some of that kind of paper. Then you will see a diverse set. I mean, the kind of paper we are seeing is across retail, across logistics, across services. A lot of them will also have, exits from private equity, which has been the norm in the last period of time. And again, these are high quality companies, well matured, and IPO is just an exit for private equity and for public to participate in those. So some of those stuff will come, and those will be very sector agnostic.
All right, so those will come, a couple of bullish comments coming in on the sidelines of Axis conference. But before we speak about Petronet LNG, just want to highlight one counter, Page Industries. If you could just pull up the intraday chart of that counter, it's also in the futures and options space. We've seen a sudden spike there. It's up almost 7.5%. I think the numbers were supposed to come. Not sure if they're out yet, but okay, maybe it would have reacted to that. But the buying which you're seeing on the intraday chart has just come in the last 15 to 20 minutes. That's Page Industries for you. But the stock in focus is Petronet LNG. The company posted a strong second quarter, and Neeraj has culled out some very interesting insights which the Bloomberg terminal is throwing about. Neeraj.
Nothing that I've done, it's just the terminal showing its magic out here, Navneet. But yeah, just some trading highlights and what could be happening. So 3% higher today. It's come off from the highs of the day, but the volumes are substantially higher than the 10-day average. We'll talk about this in a bit. The volumes are substantially higher than the 10-day average. But I was just speaking to Somit before I came into this piece, and there was this volume surprise which led to the numbers looking much stronger. Dahej, Kochi, they've contributed much better than what maybe people were working with, and therefore the volume's much higher, 220 TBTU versus expectations of 200. And I think, unless I'm very wrong, the expectation, maybe the management has been guided toward it, that the volume pickup from various aspects will actually increase substantially or exponentially mid-2019. So all of this leads maybe people to believe that the numbers will start looking much better in FY18, possibly FY19, and therefore the forward P multiple on the Bloomberg terminal gets slashed down quite considerably compared to the current multiple. Now look at what the street is working with. The estimates is about 18 or thereabouts, 18 or 19 odd rupees, which is the Bloomberg estimate for FY18, and it increases quite rapidly in FY19, and maybe as a result of that, you have a large portion of the street having a buy call on Petronet LNG compared to only 5 sells. So that's about 33 people either bullish or believing that it's a hold, compared to only 5 people in believing that it will not be, it's not a good stock to own right now. And maybe these numbers will change post the management commentary as well. Just a last bit on the kind of trade that we're seeing on Petronet LNG, and let's get in the volume picture out. The blue line is the 20-day average, and look at the volumes in today's session, substantially higher than the 10-day average, and the terminal projects the volumes to, well, probably be 4 times, if I'm not wrong. The 20-day average is about 4 million shares. It might actually go up to 16 million shares. So good going today, both on the price and the volume front for Petronet LNG. Yes, in the last 1 hour, you can argue that Page Industries is probably the stock of the day. But yeah, for throughout the day, if you look at the pattern, Petronet has done reasonably well for itself.
Well, it goes without saying, the stock's been doing pretty well, and Bloomberg Quint's Bhanvi Arora caught off with the managing director and CEO of Petronet LNG, Prabhat Singh, and started off by asking him about where did the additional demand come in from in the last quarter.
Q2 has been high because like I've been telling, that the pricing of LNG has been good, and at the same time some volumes were required additionally because some power requirement came in, and on that part there was something additionally required. Some wind power went down, and that required more of gas into the system. So there was demand, and we are happy that our terminal was ready to take that demand and be able to serve the customers the way we wanted. 110% is what we've done this quarter at the Dahej. So I would rather say that overall the issue would be that in the coming quarter also we are going to be more than 100%. But yes, a shade plus minus may happen. We would try to see that it happens completely 110%. But I feel that it may be a shade lower than this.
Okay, what are your expansion plans? Any new terminals you're planning for this year?
Of course, the Petronet LNG management speaking about their numbers, post the numbers really. Okay, let's get in our experts on board. Firstly, to decipher how the trade pattern is looking like today. It's a very flat day of trade. But Jay Bala of cashthechaos.com as well as Sachidanand Uttekar of Trade Bulls join us right now on the show to talk about their thoughts on how trade could be looking in the near to the medium term. Gentlemen, good morning, both of you. Good afternoon, rather. Thanks so much for joining in. Jay, to you first. Anything that traders, short-term, medium-term traders can do on any of the benchmark indices today?
Yeah, I think, see, the markets are looking ripe for a short-term correction at least. So, you know, it's whatever position you've been having for the last several weeks, it'll make enormous sense to, you know, buy a hedge at this point of time. I think, if there's any upside, it's something about 100 to 200 points on the Nifty, not beyond that. But if there's a downside, which is the more likely scenario at this point of time, this is from a very short-term perspective. I'm not turning very bearish on the market. I'm just from a short-term perspective. I think that's going to be somewhere around slightly below 10,100 to 9,900 on the Nifty. So given that, risk-reward potential, I think it'll make fantastic sense for somebody to go along on the 10,100 put. And then, it can be a hedge for your existing positions, or it can even be a short-term trading call. I think this put option is likely to triple or even go 5 times from its current positions. So that gives a nice, tidy risk-reward position at this point of time.
And that's the current month, right? Jed, the put option you are recommending 10,100 put for the current month, right?
That's correct.
Okay.
That's correct. That's a November option, and it's currently trading at about 35.42 in that range. So so I'm expecting it to hit somewhere about 120 to 150.
Sachidanand, what's your view on Nifty Bank? Will you also recommend buying into puts of Nifty Bank as well, like what Jay has recommended on Nifty?
Well, good afternoon. Yes, in fact, the way we are looking at the market, we are expecting, a sizable correction to be witnessed during this particular expiry itself. So I think, if you look at a broader structure itself, we have been talking about the megaphone formation, and the lower end of the formation is placed somewhere close to 10,000. So with that intention, banks is something wherein we may see a major contribution coming in from this particular pocket. So I think, purely from a trading perspective, if you look at the immediate support for say is around 25,000. So once 25,000 is breached, probably we may see a sharp cut even in Bank Nifty. So what we are right now recommending is, some positional trades wherein a bear put ratio spread can be initiated, because we have seen that the way Nifty has reacted from the 10,500 mark, we are expecting that this particular downtick has already commenced. So probably we are expecting an expiry below 10,300, and most likely near to the lower end of the pattern, which is around 10,000. So it's a very good opportunity to create this particular strategy, wherein you are buying one lot of 10,300 put, and what we are recommending is selling 2 lots of 10,000 put against it. So overall, we have a net spread of somewhere close to 32, 33 rupees. In case if the expiry happens about 10,300, we are losing a very small amount, but the chances of an expiry below 10,300 looks bright. So minimum reward of $75, and in case if the expiry happens close to 10,000 levels, the profit can be as high as $265. So I think this is a very good strategy which can be deployed at this scenario.
All right, let's talk about the individual stock strategy. Jay, let me come to you. And before that, before talking about the stocks, I just want to congratulate you. If I have to journey back 1 year, you had a long call on Nifty at a time when markets were reeling under pressure. All right, we've lost the connection with Jay. We'll go back to him. But Sachtanand, what are your individual stock strategies at the moment?
Well, as I said, banking is something wherein we are expecting a major, crack to be witnessed. So HDFC Bank is, placed at a level wherein a breach below, say, 1820 on the futures, could lead to a fall towards 1780. So even from a trading perspective, a conditional sell below 1820 with a stop loss close to 1833.30, and this is what we are advising. On the contrary, PVR is one particular stock which has been consolidating for last 4 weeks, and this is where we expect that the rebound that we have seen from its 200-day moving average, this particular rebound may extend right up to say 1450 or so. So 1350 is the stop loss for the trade, wherein we are recommending longs in PVR with a target of around 1455.
Okay. And if we have, do we have Jay Bala with us? Because if we do some very interesting calls, he may have a slightly negative view on the Nifty, but Jay is looking at some cash market strategies. Nitco and Shakti Pumps. Jay, for the longest time, I haven't heard anybody recommend Nitco.
Yeah, see, basically, the stock has undergone a fantastic move from 160 to 550, and if you look at the pattern from July to where it is at this point of time, it's a nice sideways consolidation, and it's trying to clock decent volumes at this point of time. And Nitco at current levels of 80 odds, it should be, we call this in technical terms as a fourth wave consolidation. So what we saw in the previous leg of the move from 160 to 550 is the middle portion of the move, and this is the consolidation move. I think the correction is ending at this point of time, and I think it's going to take its final push beyond the highs it made in July, and it's going to levels higher than that. So it's offering a very good risk reward potential at this point of time, and I think it's going to about 140. Nitco is going to about 140.
Okay, so Nitco, and the other one is of course Shakti Pumps, which is an interesting one too. As Jay said, I think the target is 620. And Jay, Navneet was just telling us about your call way back during the demonetization lows, wherein you were bullish on the index. So good going really on that front. Maybe today, towards the close of the show, Jay, we'll take a longer term strategy from you as well. But our fundamental guest is waiting by patiently for a while, so let's get him in this discussion as well. Nipun Mehta, founder and chief executive officer at Blue Ocean Capital, joins us right now on the show. Nipun, good having you. Thanks much for joining in. It's results pouring in thick and fast, Nipun. I mean, there are some 4 or 5 names which have just come out in the last half an hour to 45 minutes of trade or 1 hour of trade. But if I pick up the big boy, Tata Motors, what did you make of the delivery? One of the cheaper or the cheapest index companies, not delivering a particularly bad quarter, Nipun.
Good afternoon, Neeraj. If one were to look at the overall results that have come by till now, I think the result season is definitely positive. I would rate it definitely better than the June quarter result. Not too much was expected out of this, out of the September quarter results, but overall, our sense is when you look at a lot of sectors, there have been very few surprises, and particularly negative surprises. Most results have been better than anticipated, what the street anticipated, or either in line or better than anticipated. Of course, there would always be negative surprises. When you look at the auto stocks that have come by, you also spoke about Tata Motors. Our sense is that overall the demand has sustained itself at higher levels post whatever issues that were there post demonetization. I think the newer models that a lot of them are launching, particularly companies like Tata Motors, which have planned newer domestic models, is something that's likely to show up in subsequent quarters. Even as far as the JLR piece of the overall company is concerned, you're seeing incremental models getting launched and the demand increasing. So Our sense is, yes, not just Tata Motors, but overall, when you look at both the 2 and the 4-wheeler auto space that is there, there is likely to be improved volumes going ahead, not just coming out of the rural demand, but also potentially international companies seeing either improved exports wherever there are exports, or demand in other countries wherever manufacturing capacities are offshore. But overall, our sense is the volumes over the next few quarters should be even further improved in comparison to what we've seen in the September quarter.
Well, Sachidanand, if you look at both these stocks, Tata Motors and also Ashok Leyland, which is trading weak in today's trade, which one will you pick up to go long on?
Well, I think both are showing signs of exhaustion. In fact, we have a sell call on Tata Motors. In fact, if you look at the overall structure on the weekly scale, the stock has been oscillating within a downward sloping channel since September 2016. And recently, a few days back, we saw this the upper end of the channel again getting tested. So we are really not optimistic on both the names. In fact, we are looking for a correction in both the counters.
More Tata Group company, Tata Global Beverages. If you could just pull up the intraday chart, that's seen a good amount of move on the upside. In fact, the stock's just about trading at day's high with gains of closer to 6%. Jay, at 238, would you take any trade on Tata Global Beverages?
See, if there's anything that's favorable at this point of time in the FMCG name, I think it's something like a Dabur or something like a United Spirits, which we spoke about a couple of weeks ago. And I don't see Tata Global Beverage as an attractive option at this point of time. The risk, it doesn't mean that the move is ending, but from a risk reward perspective, I don't see that as a favorable option at this point of time. So it's an avoid for me at this point of time.
Other stocks which have done really well, Rain Industries is up 8.5 yet again, and at 369, I think this would be close to its highs. Amara Raja up 7%, and Vakrangi Software up 5.5% at 585 and counting. So really good show put up by this one too. Nipun, the consumer-facing names, at least if the recent days are anything to go by, the numbers have been strong. Pages perking up on the results day. Future Consumer Enterprises, good numbers. Pidilite, arguably one of the best quarters that we've seen in recent times from this one too. What do you make of the recent results, and anything that has stood out for you?
Well, like I said earlier, I think there have been very few negative surprises. You've really seen across, and particularly the consumption space, really improved results, in line or improved results. Clearly reflecting not just that the demonetization issues probably could be over for a lot of consumers. One must factor in the point that there was the festive season, which has also contributed to an extent to the higher volumes or higher demand. But that's something that's also likely to contribute even for the December quarter. Going ahead, our sense is not just are the margins expected to be maintained, but you could, in certain cases, also see improved margins that could come by. There is very clearly that product differentiation that is happening in terms of certain higher-end products where the margins are showing improvement, where there is that pricing power that is coming in. Probably the lower-end products where margins are low is where a lot of these companies are focusing on volumes. But our sense is, yes, I think this entire consumption space is something not just coming out of, again, the rural demand, but in certain cases, also the urban and semi-urban demand is likely to be contributing significantly higher. More so out of the fact that now that the digitization or the overall digitization of the economy is picking pace, that's something that could further ensure that there could be an uptick as far as volumes are concerned.
Well, the markets are off days low right now. Sensex is almost in the green and Nifty is just down by about 3 to 4 points. Let's see if we can manage to close the day in the green. All right, on to a Bloomberg Quint exclusive now. And in fact, the UP government has cleared 25,000 crore rupees of sugarcane dues that had built up over the last 4 years, says Chief Minister Yogi Adityanath in an interview to Sanjay Pugalia. He said the government will invite applications for 4 lakh state government jobs, including posts for police and teachers. Listen in.
हम लोगों ने पहले चरण में किसानों की कर्ज माफी के कार्यक्रम को इस आधार पर नहीं किया कि हम उनको कोई रेवड़ी बांट रहे हैं। वर्षों से दबी हुई भावनाएं, जिनको अपनी उपज का उचित दाम भी नहीं मिल पाता था, जिन्हें प्राकृतिक आपदा तो ले डूबती ही थी, शासन की उपेक्षा उससे भी बदहाल उनको बना देती थी। उन्हें मुख्य धारा के साथ जोड़ने, फिर उनको उपज से अधिक दाम उन्हें देने, गन्ना मूल्य का भुगतान हमें 4-4 वर्षों का करना पड़ा। 25,000 करोड़ रुपए गन्ना मूल्य का भुगतान हम किए हैं। आज आप देखे होंगे प्रदेश के अंदर हमारा लगभग, मेरा अनुमान है 2 करोड़ 43 लाख के आसपास हमारा किसान है यूपी में, जो हमारे पास रजिस्टर्ड है किसान। हम उस किसान को, आज वो किसान बहुत तन्मयता के साथ अपने खेती के कार्यों में लीन है, धरना प्रदर्शन नहीं कर रहा। नहीं तो यही लखनऊ है ना, कई महीनों तक किसान यहाँ धरने में बैठता था, दिल्ली में बैठता था। आज यूपी का किसान अपनी खेती बाड़ी में लगा हुआ है। एक दूसरा, युवाओं के लिए हम लोगों ने अपनी जिन नीतियों को लेकर के आए हैं, हम आने वाले कुछ ही समय में 4 लाख से अधिक नई नौकरियां राज्य सरकार की देने जा रहे हैं, जिसमें पुलिस की भर्ती के साथ साथ विभिन्न पदों में शिक्षकों की भर्ती की भी है और भी योजनाएं हैं। और 6 लाख से अधिक हम लोगों ने स्किल डेवलपमेंट के माध्यम से युवाओं को रोजगार के साथ और नौकरियों के साथ जोड़ने का कार्य किया है। हर उद्योग के साथ कुछ ना कुछ यूथ को हम जोड़े हैं, उसको ट्रेनिंग करना, फिर उसको कहीं ना कहीं जॉब के साथ या उसको रोजगार के साथ जोड़ने की कार्रवाई। 6 लाख के आसपास यूथ हमारे उसमें आ चुका है, जिसको हम रजिस्टर्ड कर चुके हैं। इसमें हमारी कार्रवाई चल रही है।
You can catch different snippets from the conversation all through the day today and the entire interview at 9 p.m. tonight. Let's move back to the market and let's try and spot some more stocks. Carborundum Universal is one stock which has moved up around 6-7% in last 1 hour of trade. Let's get that chart on your screen. Yeah, the stock is up 4.5%. This has been buzzing, in fact, for over a week now, although it corrected for last 2 days and is again moving back. There are so many other mid-cap and small-cap stocks that we'll talk about, and right now what you can see on your screen is the management of HPCL is all set to share details of their quarterly numbers. We'll cut across to them as soon as the statement really starts. This is a significant number that came out today. Street is a bit disappointed though, especially because the GRMs were way below the expectation, although that has more or less been the trend. We'll get details about what were the real driving forces behind the numbers that came out and what kind of outlook is the company really going to share with the shareholders. Well, while we are waiting for it, okay, I think we can now cut across to the press conference.
The results for the quarter which is ended on September 30th, 2017 and the half year which is ended in September 2017 for HPCL. HPCL has posted a quarterly profit of 1,735 crores in Q2 of 2017 as compared to 701 crore which was posted in the second quarter of last year and 925 crore which was posted in the quarter 1 of this year. With this, the half yearly profit for HPCL is 2,659 crores for the year 2017-18 in the first 6 months. The sales revenue has posted an increase of 13.4% in quarter 2. It stood as 54,153 crores versus 47,750 crore in the same quarter of the previous year. Accordingly, half yearly sales revenue is 1,14,066 crores versus 99,350 crore last year, which is a gain of 14.8%. The GRM for this quarter is $7.61 per barrel versus $3.23 per barrel in the second quarter of the last year. If you see the half yearly GRM, it is $6.75 per barrel versus $5.12 last half year in the previous year. The total throughput in the refineries, HPCL, both the refinery has clocked the highest ever half yearly throughput in H1, that is 9.13 million metric ton, which was 8.52 million metric ton last year. Both the refineries has had the capacity utilization of over 110%. In the quarter which is just gone by, the crude throughput was 4.64 million metric ton versus 4.04 million metric ton the second quarter of the last year. Sales for the quarter stood at 8.72 million metric ton versus 8.17 million metric ton last year, which is a gain of 6.7%. Pipelines has clocked an increase of 22.6% throughput increase in this quarter. It stood at 5.05 million ton compared to 4.12 million metric ton last year. If we see the half year, the sales stood at 17.57 million metric ton with a growth of 4%. MS clocked in growth of 8%, HSD 3.4%, LPG 10.6%, ATF 13.8%, and bitumen 5%. During July to September quarter, the domestic sales was 8.37 million metric ton, which was 4.6% growth. In this, MS was 7.1% growth, HSD was 4.4, LPG 10.4, lubes 23.2%. In quarter one, if you remember, the lube sale was down because of the pre-GST issues, so a part of that has been recovered. Aviation turbine fuel has clocked 2.5% and bitumen 1.6%. I am also happy to share that HPCL continues to be #1 lube marketeer and has become the first oil company to have launched its products in Myanmar. So recently we have made a foray of distribution of lubes in Myanmar from 2 major cities of that country. In LPG bulk sales, we have got over 47% market share. 216 new outlets have been commissioned during H1 and 96% of HPCL outlets are capable of accepting digital payments. During this period, a new depot at Nalagarh has been commissioned, which has got a capacity of over 2100 KL and a tank truck loading facility, and our Jabalpur depot has been revamped. In refinery, a new tailgas treating unit has been commissioned, and I am also happy to say that Mumbai refinery has clocked 20 million safe man-hours for the first time. A new aviation facility has also been added at Patna. HPCL joint venture refinery HMEL, as you are aware, it has expanded, and after expansion the refinery is commissioned and is now the capacity of the refinery is 11.25 million metric ton and it is able to achieve its full capacity. Vizag refinery expansion project.
All right. right, that was the management of HPCL talking about their September quarter earnings. But there are a lot of stocks in the consumption pack which are buzzing now. I remember Jay was talking about Dabur. That's up almost 2.5%. Colgate Palmolive has surged about 2% in today's trading session. And not only that, Titan is up almost 4% right now. GSK Consumer was the other company which was, Titan is actually almost a day's high currently, and GSK Consumer up 3.5%. The stock's been buzzing in the last few trading sessions, and obviously since morning we've seen HUL being traded with good amount of gains. DMart is the other one which is up almost 2.5%. But it's time for us to talk about the buzzing stock of the day, and that's Page Industries. Nikki Merchandani joins us with more details on that stock. Nikki, over to you.
Hi Navneet. So Page Industry is a stock which has been buzzing today after a good set of numbers. 6%, 5.5% run that we've seen for this counter. The levels are almost at March 2000, early March levels that we've seen in this year. Volumes remain high at 7 times its 30-day average volumes. If you look at the terms of the Q2 performance of this company, good run, steady set of numbers. Revenue has been up as much as 17% at 625 crore as compared to a base figure of 534 crore in the corresponding quarter. Net profit has also risen 22% at 84 crore. EBITDA too, for that matter, has risen up to 20% at 128.43% in this quarter, 43 crore in this quarter, as compared to a base figure of around 107. Margins have expanded at 21%. The company has declared an interim dividend of rupees 35. That's again a sweetener which the company has offered. Perhaps one of the reasons why the stock is also running up today. If you look at the rationale, what goes behind the making of these numbers? Well, higher sales combined with your operational efficiency has trickled down well in the bottom line performance of the company. Also, if you look at the finance cost, that has been lower. Even a higher other income for that matter has aided the profitability of this company. If I was just supposed to give a little color of what this company is all about, well, it's a manufacturing of undergarments and has a market capitalization of around 24,000 crore. It's an exclusive licensee of Jockey International Incorporation, and also, Navneet, that has been maintaining good set of numbers, steady set of margins that you've seen, 19-20% growth that the company has managed to perform on quarter-on-quarter basis for now. Shareholding pattern in that, for that matter, promoter holds as much as 49%, public holding stands at 51. In terms of the stock return for the company, 1 week itself, the company has gained 9%. For a year, it has seen gains of a little over 40%, and on YTD basis, the gains have gone up by 60%.
All right, Nikki, thanks a lot for bringing all those details. So Page Industries is up on back of a healthy quarter. I just want to pull up the futures as well, as it is one of the top F&O gainer also for the day. Look at that, open interest up almost 70%, but the futures are trading at a discount of as much as 277 rupees right now. So keep an eye on Page Industries. Long build-up has been seen on the futures side. On that note, let's also do a check of the European markets, how they have been trading so far. It's been a mixed start there, and at the moment all the three indices, CAC, DAX as well as FTSE 100, are trading in the red right now. But back home, one more pack which is just perked up in trade. I just want to highlight the footwear stocks are doing well. If you could just pull up the intraday chart of Bata India, that's seen gains of as much as 4 to 5% right now. Okay, it's up almost 4%, but it's trading at days high. And the peers, Relaxo, Superhouse, Mirza International, all of them have seen gains. In fact, Relaxo is also off days low. Superhouse sitting with gains of as much as 3.5%. We'll get a technical view on this space, but before that, let's go across to Yash Upadhyay to find which are the Fab 4 stocks of the day. Yash, over to you.
Thanks for that, Navneet. So, Lumax Industries makes it to our Fab 4 list today. The stock has gained close to 9% today after Edelweiss Investment initiated coverage on the stock. They set a target price of 2,650, which translates into an upside potential of close to 38% from yesterday's close. Now, they believe that a healthy auto demand coupled with a rising LED mix and cost efficiency measures undertaken by the company as the key factors going forward. So, good news there. Moving forward, we have Bombay Dyeing. Now, this one is locked in an upper circuit of 5% after reporting a healthy set of Q2 numbers. The company reported a net profit of 53 crores while it had reported a net loss of around 37 crores for the same period last year. Also, revenues and margins saw a healthy bump up on a year-on-year basis, and hence the stock
stock is locked in a 5%. Also, we have IFB Industries. Now, this one has been on a roll for quite some time since, coming out with their Q2 numbers. The stock has gained the most in over 4 months today, extending its winning streak to day 5 and gaining close to 18 to 19% in that period. So do watch out for this one. And lastly, we have Precall. Now, this one is up close to 5% and has managed to snap its 4-day losing streak after the company announced that it has entered into an exclusive joint venture with Hong Kong-based Zog Industries for the manufacture and supply of parking assistance systems in the Indian market.
All right, Yash, thanks a lot for bringing the Fab 4 stocks of the day. And Nipun, just the closing thoughts from you. What's the investment theme that you would be deploying right now at a time when we are seeing some bit of correction coming into the markets?
Well, on your very show last week, we advocated cement as one of the key themes that should be focused on. Even when we look at the kind of results that have come by over the for Q2, they've been better than anticipated. Margins gradually improving, in certain cases, clearly coming out of higher transportation costs or the raw material, the petcoke prices. But overall, in terms of the demand situation, gradually showing signs of an uptick. More importantly, operational efficiency kicking in, and that's something that's already showing up in a lot of these companies. So that's one theme that we are banking on when you look at the next few quarters. Beside, of course, the autos and the consumption space that is there. But our sense is there is the further traction that could come by in each of these three segments very clearly over the next few quarters.
Okay, thanks a lot, Nipun, for taking time out for us. Well, let's look at some more stocks which have been moving up, and Jet Airways is one interesting stock which is now up roughly 7%, 7.25%. Look at the move actually, and what is the reason behind it? Probably some congestion at Delhi airport given this smog, ticket prices moving up. These are the kind of talks which have been going on really, and that could be a reason why this stock has gained. Sachidanand, do you have a view on Jet Airways?
Well, definitely. In fact, the way the volume built up has been since the start of this particular expiry. The way momentum has continued in this particular stock. So we expect that this particular stock, still rally. It could still continue its rally further. In fact, on an immediate basis, we have a target somewhere close to 703. And in fact, the way momentum is shaping up, probably one can keep a stop loss somewhere close to say 640 or so. And even right now, can deploy long positions for a target of around 705 on the 705, 704 on an immediate basis. So the way the entire structure is planning, I think this is one of the finest stocks on the contra play, and in fact we are expecting that this particular stock could outperform in the coming months as well.
Okay, Jet Airways almost at day's high with gains of 7%. Jay, we were talking about the footwear stocks which have seen good gains in last 15 to 20 minutes from the likes of Bata, Relaxo, Superhouse, or for that matter Mirza International. Is there anything in that space that you like?
See, it's only going to be a relative play. I think Relaxo is an avoid. I think it's seen a spike high. Usually these spike high come near the top. So, I think any upsides in Relaxo is going to be very short term and limited. And if you got to be within the sector, it's got to be Bata. And Bata is very likely to be a 1,000 stock. But I should also add that from a medium to long term perspective, I think this is the final leg of the ascent for the stock. I think you should, from an investment perspective, when it starts heading beyond 1,000, it's time to liquidate even your long-term investment positions. I think it's going to top out at this around those levels, and so from a short to medium-term perspective, Bata is better than Relaxo and any other name within the footwear space.
Jay, in fact, you have been bearish last week, and we have seen probably the first round of correction already in the market. Any other stock, interesting heavyweights or liquid mid caps where you see, where you think this is the right time to exit? Anything that you would like to recommend?
See, that's a bit of a difficult call, but if you recall from our Muhurat trading session conversation, I said Bharti Airtel is actually breaking out, and we had a short-term pullback, a mild sell-off in that stock. I think our call on the Muhurat trade session was that the Bharti Airtel stock is heading towards 600 plus. So I think that call still remains, and in my opinion, Bharti is going to act as a defensive when the market starts coming down. So the 600 plus price objective still remains. So I think from where it is at this point of time, that's an ideal entry point, and it's a very liquid stock. So you asked for mid cap, I'm giving you a frontline name, and I think from here onwards, what's going to be important is I think what people will consider as defensive, that's going to perform well. Maybe that's probably the reason why you're seeing FMCG names do very well, and some Bharti was considered a defensive during the 2008 crisis. It could be IT, which could be the crisis, it could be acting as a defensive from here on. But a very important point at this point of time is crude. Crude is going to explode to something like 80 to 85 from here on, and so if you're going to be in a particular stock. Anything that will provide a tailwind based on higher crude prices, you should be in that sector. For example, we spoke about Jet just now. I think this is just a trading bounce at this point of time. Once the crude prices start firing up, even beyond what it is at this point of time, I think the pressure of higher fuel prices will come into play, and negatives will start kicking in for Jet.
All right, Jay, we'll leave it at that note. Thanks a lot for joining us today on Bloomberg Quint Live and giving us your views on the markets. Just want to highlight a couple of stocks from the broader markets which have seen good amount of gains coming about. One of them is with these specialty food ingredients. I remember just 2 days back, the stock was locked in upper circuit with gains of 20%. It's touched its fresh 52-week high once again and is sitting with gains of about closer to 11%. I know Yash has already highlighted Lumax on back of that Edelweiss coverage, but the stock is up almost 11%, and MEP Infra has now seen gains of as much as closer to 14 to 15%. So good day for MEP Infra as well, and the market seems to have recovered. Nifty just about trading on a very flattish note, but Sensex and Bank Nifty have recovered from their lows. Good time to get in Mayuresh Joshi, fund manager at Angel Broking, who's joining us now. Hi Mayuresh, good afternoon. Thanks a lot for joining us. What are you buying, or rather what are you recommending your clients to buy at these times when there is a bit of correction which is coming into the markets?
Very selective. Largely, again, I think it's going to be more in terms of earnings recovery stories going ahead, as well as the value stories in terms of earnings growth still picking up momentum. So with that respect, the government reforms and announcements that are expected both in the Bharatmala projects that have got announced, which means that a lot of orders can start flowing through for EPC players, road construction companies. I think this is a very interesting space that one can look at. Specialty chemicals, again, I think this is where selectively, again, my own sense is that with a lot of environmental issues being still played out in China, a lot of effluent discharge still getting played out. My own sense is specialty chemical players should also have a good run. And again, I think with the large cap names being selective on banks and a few of the PSU banks. So to name a few stocks, probably I think Shri Pushkar Chemicals from the specialty chemical space, Bodil Chemicals on any decline. I think these are interesting stories that one can actually cherry pick and start looking at. NCC's got a huge order book. My own sense is that there will be more further orders probably coming through, and with good execution, return ratios should improve. We're probably looking at a couple of power players. So I think Kalpataru, KEC, very reasonable order books, expectations of further orders coming through, and margins stabilizing, holding good for these stocks. Corporate facing balance sheets, I think, and banks, I think ICICI Bank is something that I'll continue to like. So yes, I think these are a few stocks within the large and mid-cap universe that can do well on any significant decline in the markets.
I see some movement in Bajaj Electricals, and that reminds me, an all-important meeting of GST Council, which starts today. Mayuresh, there is expectation that probably, ceiling fans will become cheap. Maybe some other, consumer items could also get some GST relief. Prominent among those could be plastic furnitures. Even your restaurant bill may come down, with the AC restaurants charges may also be brought down from 18 to 12% on a par with non-AC restaurants. Have you looked at some of these consumer names, anything that you like in this space?
So afternoon, Pradeep, yes, I think Bajaj Electrical is something that we have been liking over a period of time, with legacy orders probably getting out of the ENC book. You're probably looking at margin stabilization happening, but it's going to take a few quarters. So I think the transition probably to GST and the full impact and implications on how it will play out on its own balance sheet with supplier constraints, and again I think compliance requirements needed to be followed across the value chain. We're probably going to see that the numbers probably vindicative of the fact where margins probably remained a little bit sticky this time around as well. But from a bottom-up approach, my own sense is that any decline onto a stock like Crompton Greaves Consumer, I think that looks very, very interesting. The high-margin consumer durable business is where the company focuses at this point of time. And as that business starts getting traction, the kind of stability and expansion in margins that one can see over the next few quarters can be quite humongous. Even on the electric part of the business, LED is now a large part, as is it for most other players within the space itself. So yes, I think reduction in GST probably gives the organized players a far leaner and a greater advantage over a longer period of time. So yes, the whole rating on Bajaj continues from a bottom-up approach. Crompton Greaves Consumer is something that will continue to like.
Well, the markets are picking up some sort of momentum because there are a lot of stocks in the broader markets which have seen good amount of gains. Let's just pull up V-Guard. That counter is up almost 6% right now. I think it's trading at day's high. The intraday chart will just come up on your screen. Yep, it is trading at day's high, gains of almost 6.5%. Sachtanand, on the charts, is there any fresh breakout that you're seeing on V-Guard?
Well, I think if you look at the weekly structure, the breakout was placed somewhere close to 200, and what we are seeing is just a follow-through move of that particular breakout. The volumes have really not been that consistent, but the way the breakout had panned out, it suggested a target somewhere close to 253, and I think the stock is on its course towards that particular level. So probably we may see this particular momentum getting continued right up to 253 levels.
Okay, that's the view coming in on V-Guard. Probably you can look to buy at these levels. That's the view coming in. But it's that time of the show when we take a look as to what the dealing rooms are recommending. And to take us through the same, as usual, Darshan Mehta and Yatin Mota are joining us. Good afternoon to both of you. Yatin, over to you first.
Thanks for that, Navneet. Of course, it has been a volatile day for the markets, especially the earnings, scorecard has not that been great for HPCL, Tata Motors, all of these stocks seeing volatility. But HPCL is one stock wherein even at lower levels, we are looking at some domestic fund demand which is coming in. So at lower levels, a lot of domestic mutual funds are said to be buyers as far as this counter is concerned. So watch out for this one. Also, talking about Indian Bank, that is one PSU bank which has seen decent improvement in its asset quality and probably will not require aggressive capital like its counterparts in the PSU banking space. So Indian Bank is something wherein dealers are recommending a BTST based on FNO trends. And finally, watch out for Sonakoyo. They will be reporting their quarterly earnings tomorrow. And before that, we have the stock which has gained almost 11%, and HNIs are said to be buyers in trade ahead of the quarterly numbers tomorrow. But Darshan has a few more.
Yeah, so Ujjivan Financial is up in today's trade. It's up almost 2.7%. Strong buying traction was seen. Spoke to multiple of the dealing rooms, and they have indicated that they have pending buy orders for Ujjivan Financial. Even on the charts, looks extremely strong. So Ujjivan is the first counter. Kajaria Ceramics is up 5%. Now the two-day meet for the GST Council starts today. The rate for some of the products that Kajaria sells, especially home building equipment or tiles, is at 28%. There's a high expectation that this rate will be bought out for. So Kajaria is something that dealers are talking about, and a lot of HNI accumulation happening ahead of the SBI numbers. They believe this time around the numbers will be strong. So SBI is something that they're watching out for.
Thanks, Darshan, for all these details. So Indian Bank is one that really looks interesting. Mayuresh, do you think among the PSU banks, one should pick up quality names like Indian Bank with low gross NPA of around 6 to 7%? Any other mid-cap PSU bank that you really like?
So I think this is one bank we discussed, Pradeep, on your shows a few weeks back. And this is something that I've been liking, because if you put the Indian Bank even on the grid right now, with the reported GNPs at 6.67 odd % in the quarter gone by, and expectations of getting this number below 5% with strong upgrades, recoveries, and very strong capital adequacy. This bank looks in a very, very strong position to probably deliver earnings growth in excess of 15-20 odd %. Having said that, I think if one really is selective over the next 1.5-2 years and has that kind of a time horizon within the mid-cap space, Vijaya Bank on declines is something that I will prefer on declines in a very staggered way. They've shown significant improvement in terms of asset quality as well. Net NPAs are down to 5.86%. If you look at the provisioning that they've done, obviously aging related, but it shows that the counter-cyclical provisions that they've provided for against the balance sheet in terms of an absolute GNPs of 6,600 crores is well accounted for. Secondly, I think if you look at their earnings trajectory, NII growth in excess of 20%, profit growth in excess of 20 odd %, and the management commentary again is testimony that they are planning to probably decrease their asset quality issues, GNPs, NPAs over a sustained, in a sustained manner over the next few quarters. And even on a price to book parameter, it is one of the cheapest banks, assuming that what the management is saying goes as per plan. So yes, Vijaya Bank on declines in a staggered way is what I will be looking at from the mid-cap universe. Indian Bank is something that I continue to prefer.
Okay, so Vijaya Bank and Indian Bank are the top two picks from the banking space. But before we head across to Saloni, just want to pull up one stock, PC Jewelers. It's in the F&O space as well, and the stock has seen good amount of buying. Look at that, it's trading with gains of as much as 8% right now, and the majority of the buying that you're seeing has come in the second half of the session. Sachtan, then quickly on the charts, any fresh buy would you recommend on PC Jewelers?
Well, the stock has been oscillating within the range of 330, 365. So I think it is just tad lower towards that. So probably we may not be excited enough to really give a long position or long recommendation at this point of time. One should wait for a breakout to emerge, and then probably we can review the stock. So as of now, no fresh trades so far as PC Jewelers is concerned.
Mayuresh, should I like anything among the liquor stocks? Look at Global Spirit, which is the top gainer actually at this point of time, roughly a 12-13% swing that we have seen in last 1 hour or so. But also you have Radico Khaitan, even United Breweries moving up. Okay, Globus is now at 20% circuit. Radico is up 4.5%. What do you like in this space, Mayuresh?
No, so good set of numbers, Pradeep, and largely again I think if you lay out how the expectations are played out with regulatory concerns, with large part of the hikes probably happening in terms of duties going up which needed to get passed on to the consumers, and stickiness in terms of volume growth, I think the industry has climbed a wall of worries. So I think all these concerns are largely behind them now, and expectations of premiumization with high margin products probably getting into the market along with good volume growth actually sustaining. I think this is something that the industry is probably looking out for over the next few quarters. Can the competition be sticky? Yes, competition can be extremely competitive and sticky as well as far as hikes or realization growth is concerned. But to a large extent, I think this industry is more dependent in terms of volume growth, which can come through as per management transcripts. So from a momentum perspective, my own sense is that Radico Khaitan is something that can show positive divergence going ahead as well.
All right, it's 3:20. Let's go across to Saloni Dhanuka to find out which are the key factors to be watched out in tomorrow's trading session. Saloni?
So for tomorrow, we'll be keeping an eye on 4 nifty companies reporting their second quarter numbers. That is BPCL, Bosch, Mahindra & Mahindra, as well as State Bank of India. And mind you, both Bosch and SBI are trading up over 1.5% ahead of numbers tomorrow. Elsewhere, Balaji Telefilms, Bank of India, BEML, Cochin Shipyard, Dana Bank, Dredging Corp, DLF, Motherson Sumi, MF, Nestle India, Sun TV, and a bunch of other companies you have to watch out for because of earnings. We'll be also keeping an eye on the 23rd GST Council meet, which will take place tomorrow in Guwahati. Now, do keep an eye on this one because according to a lot of media reports, government may announce new measures to boost digital payments as well as cut few taxes on few products. On the economic data front, India is to release weekly foreign exchange data, so do keep an eye on this one as well. And lastly, UK is to release industrial as well as manufacturing production data tomorrow. So do keep an eye on all these events for tomorrow, Navneet.
Thanks a lot for all these details. Actually, Navneet, this is an interesting theme. Digital payments. If there is an announcement, I think which stocks should we watch out for? TVS Electronics, Bartronics. Maybe these are some of the stocks that I can recollect. A year back around demonetization, the way they moved up. Mayuresh, what do you like on this theme, if at all, anything?
I think TVS Electronics is something that you mentioned, Pradeep, right now, and it looks very, very interesting because as the number of transactions keep picking up and more digitalization is happening across industries and across core sectors, I think you are going to see incremental benefits actually start flowing through. So yes, I think TVS is something that can incrementally benefit from increased digitalization going forward.
Well, the markets are back in the green. Nifty above the 10,300 mark at 10,320. Remember, today is the day for the Bank Nifty weekly options expiry day. So in the second half of the session, you have seen some bit of buying coming back. And the Bank Nifty is also trading above the 25,300 mark. We had highlighted for you the expiry could likely happen in the range of 25,100 to about 25,400. And what's actually contributed to this recovery, let's just pull up the Nifty PSU banking index. It's, I think, almost at day's high, sitting with gains of 1.5% or so, and most of the, or rather all the constituents of this index are trading in the green. So that's off day's low. Indian Bank is up almost 9%, Bank of India up 3.5%, Union Bank also seeing gains of as much as 3%. Sachithanan, any trade on any of the banking counters?
Well, when it comes to PSU banks, we are refraining ourselves from taking any fresh commitments here. So we are expecting that this particular space could stay subdued. But the way Indian Bank has been outperforming this entire pack, I think there is still some room left on the upside. So probably when we talk about momentum, it is quoting somewhere close to 405. So probably it may add some more steam in this particular rally, and 425, 420 kind of zones could be seen. But apart from Indian Bank, I don't see any strength in any of the other PSU names.
Okay, so that's the call on banks really. Let's look at some more stocks which have moved up. Mirza International is the stock which is among the top gainers now. Footwear companies, Navneet has been just focusing, I think, a couple of minutes back, and now we see all these stocks really catching up. So Mirza is now catching up.
I don't know when's the Khadim listing actually. Or that's,
yeah, that could be an interesting trigger for all these companies. Relaxo up 2.5–3%. Let's look at some more gainers in last few minutes of trade. JK Paper has moved up. Okay, that's an interesting stock, gaining 3 to 4%. That's a swing move actually over last 1 hour or so. SBI Life Insurance is moving up. Okay, that's one interesting stock. Team Lease is up 3.5% in last hour or so, is up 5% in today's trade. These are some of the stocks that people are trying to pick up. That's the point that we are trying to make here is that several mid-cap and small-cap stocks have actually witnessed buying in today's trade, especially in last hour, as Nifty is trying to form a base around today's low of around 10,365, has gained around 50–55 points from that level. So after falling for 2 days, markets are probably finding a base and trying to build on that, and we are trying to find as many opportunities as possible. So these are some of the stocks that we have highlighted. Dr. Lal Path Lab should come on your screen, and also Goa Carbon. 2 more stocks that I can see moving up. Carborundum Universal going to close with around 6% gains. Make Money Organics has also bounced back after correction that we saw over last 2–3 sessions really. So these are some of the stocks to watch out for, but let's see how market is going to close. 10,320. Not a bad closing, Navneet, looking at how the markets were really doing an hour back.
Not at all, Pradeep. In fact, we're closing above the 10,300 mark. After that gap up opening in the morning, there was a selling pressure. But once again, in the last hour of trade, markets have seen a bit of recovery. So positive closing is not bad at all. Sensex will be closing with gains of over 50 points. Nifty breached the 20-day moving average today of 10,277. But there's been a huge recovery from those levels. Bank Nifty weekly options expiry day saw a good amount of buying. The Nifty PSU banking index saw some bit of traction. So that'll be closing with gains of as much as 150 points. From the broader markets, they definitely outperformed the benchmark indices. The Nifty Mid Cap Free Float Index up almost 250 points, and Nifty Small Cap Index Index also registering gains of as much as 1%, and the BSE small cap index also saw a good amount of buying. So clearly there was more buying which was seen in the broader markets in today's trade. Let's look at Sensex constituents then and see which were the counters that contributed today. Let's look at the gainers first. Asian Paints is your top gainer with gains of as much as 2%. Bharti was trading in the green all through the day, so that also saw gains of about 2%. Heavyweight ICICI Bank and State Bank of India contributed to today's rally clearly, or rather the recovery which one saw in the intraday session. The other heavyweights, Reliance Industries and HUL, were a couple of other counters which contributed. On the losing side, your biggie ITC actually capped the moves today, so that was down as much as 2%. Coal India has been reeling under pressure in the past few sessions, and also ONGC was down 1.3%. Other heavyweight HDFC was down as much as 1%. So a couple of private banks, Pradeep, is what I'm spotting. Kotak Mahindra Bank was down in today's session.
Yeah, but interestingly, there are so many mid-cap and small-cap stocks one could spot in today's trade. I think it all changed over the last 2 hours of trade, post 2 o'clock, so to say, since we started this show, countdown really. And if you look at some of the mid-caps that have gained in last hour of trade, you have DHFL coming on your screen, and also look at Indiabulls Housing. So housing finance is one theme that traders really liked, and they were buying these stocks at lower levels today. Also, liquor counters. So look at Radico Khaitan, look at Global Spirit that actually ended at 20% high. Even the biggies like United Breweries moved up. The most interesting theme of the day was actually auto ancillary. Lumex Auto is one stock to watch out for. There is an initiation report from Edelweiss, so stock opened higher, but at the end 11% up. So through the day we saw buying, and even in last hour of trade it moved up to end very close to the day's high. You also had PC Jewelers moving up in today's trade, despite the fact that World Gold Council has reported a 25% decline in gold jewelry demand in India, but traders are not really worried about it. Look at Amara Raja Batteries after the numbers, significant buying interest, and finally closing the day with gains of 8.5%. Hindustan Copper continues to move up, and Mirza International, along with some other footwear stocks that Navneet had spotted. What else are you spotting, Navneet?
Well, Pradeep, let's look at the contributors then in today's trading session. The list will just come up on your screen. So Reliance contributed nearly 13 points to the gains. You saw overall gains of 61 points on the gaining side. ICICI, State Bank of India, HDFC Bank, remember all of them are your heavyweights. So they contributed in today's session. What dragged the index lower was ITC, dragged it lower by 10 points. HDFC, Axis Bank, ONGC were a couple of other counters which were weak in today's session. How was the market breadth then? Clearly, it was the day for the broader markets. We did see the broader markets outperforming the benchmark indices, and as you can see, we had a gap up opening actually coming up, and then just in 2 hours you saw some bit of selling pressure coming about, but towards the end there was a bit of recovery which is clearly visible on this chart. So towards the end the market breadth was clearly in favor of the advances. Other than that, the India Volatility Index, which has been surging in the past 3 to 4 sessions, saw a bit of cool off. Look at that, towards the end it was down as much as 7.3%, so closing around levels of 12.6. Remember, it had surpassed the mark of 13.5. How was the participation then? I'm presuming the turnover would be higher, considering it was the Bank Nifty weekly options expiry. So the total turnover was 12.3 lakh crore. The NSE F&O turnover was almost 12 lakh crore, and the NSE cash was just about average 33,000. Well, Pradeep's already spoken about the footwear stocks. Just want to highlight, we did see a rally coming up for all, the entire pack actually. Bata India, Mirza, Relaxo Footwear, Super House, all of them saw good amount of gains. Let's get some closing thoughts going then. Mayuresh, just want to come to you and get your view on the footwear space. Is there anything that you like or you would recommend our viewers to, put their money in any of these counters?
So I think Bata has posted an interesting set of numbers. Even Relaxo, I think the numbers were not too bad. Mirza, again, typically known for its red tape band, but exports account almost 2/3 of its overall top line. And what really happens is that raw material, which is ethyl vinyl acetate, actually is an offshoot of crude oil derivatives. So largely, I think as crude oil prices have moved up, you're probably going to see some pressure that can build up in terms of pass-through of the raw material cost increases that can happen onto their realizations. So largely, again, I think Bata is something that will continue to hold. Relaxo looks very, very interesting. So any decline, I think, with the kind of historical trend that they've given, a 14% revenue CAGR over the last 4 to 5 years, you've probably seen a 25% EBITDA CAGR, and that translates into a 27-28% bottom line CAGR. With GST rates actually coming down for footwear below 500 odd rupees, and a large part of their production probably happens within that category, I think you can expect significant market share gains happening. The number of company-owned, company-operated stores, which is COCO stores, has absolutely increased over the last so many years. And again, the kind of expectations that one has considering debt equity, again, at very, very low levels, the earnings trajectory can actually surprise over the next few years. So relaxo and declines can become a dark horse candidate within this industry.
Okay, Sachidanand, well, we ended the day with a smart recovery from day's low, actually, and interesting names that we have just spotted in mid-cap and small cap. There is significant buying interest emerging at lower levels. How durable do you think is this recovery? Do you think we have made a bottom at least for this week?
For the week, I think 10,300 has been significant, and that's why we are expecting that the expiry level could be below this. So it's a very long expiry, and I think the significance of this trade level was clearly highlighted in today's session. In fact, this entire week. So probably going forward, we may see some bounce backs coming in, but overall the trajectory for us would be on the downside. In fact, one thing which I would like to highlight is that in the last half hour of trade, we saw a lot of small and mid cap counters coming pushing on. So one stock which has hit my radar is eClerx. So if you look at the overall weekly structure, since 2016 October, the stock has been oscillating down. So we have seen a downward sloping wedge, and this particular pattern now looks very mature. So probably the stock has been lingering below its 200-day moving average, which is close to around 1300. So I think the way it has moved up in today's session, probably we may see a surprising move in this particular counter. So we can keep a close watch on this particular counter for a target somewhere close to 1400, 1480. These are the targets indicated by the pattern. So I just wanted to highlight, since we've been talking about some of the mid cap stocks. So this is one particular counter which can be washed out in the coming trading sessions.
All right, Sachidanand as well as Mayuresh, thanks a lot for joining us today and giving us your views on the markets. It's time for us to slip into a short break. Don't go anywhere. On the other side, we discuss gold demand trends with Somasundar PR of the World Gold Council. Stay tuned.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people.
Well, you're You're watching Countdown, and markets have recovered quite a bit from day's low before closing. There is significant buying interest in several mid-cap and small-cap stocks as well. If you look at the key gainers, at the end of the day, we have Indiabulls Housing Finance as the top gainer among Nifty counters. In fact, some other mid-cap housing finance names like DHFL also moved up. Good recovery for Bharti Airtel as well. From yesterday's low of around 470 that was hit in early morning trade, and a 480 was the level where some 15 crore stocks were traded, were sold by an FII and were bought by several other institutions. This stock has recovered quite a bit from those levels, closing today at 507. Also some support coming in from banking counters, heavyweights like ICICI and SBI, and most importantly, Reliance Industries that ended the day with gains of 1.5% or close to 0.25% to 2%. These were some of the heavyweights that were really responsible for the recovery in indices today.
All right, so at least we had a positive closing today, though the adjusted rates show that Nifty closed just with gains of almost above that mark of 10,300. Let's switch focus and talk about the European markets. It's been a negative start, I believe, there. Seb Salek joins us from the London studio with the details of the equity action there. Hi, Seb.
Hi there. Yeah, it's looking pretty flat on the top line, but it's if you dig below that where you get to see some really exciting moves. Two stocks in particular absolutely plunging today. Have a look at Burberry. Strategy update from the CEO. The market not convinced. Down in double digits, the biggest drop in 5 years, because it would involve flat revenue in the fiscal year 2019 to 2020, a £15 million restructuring charge. So investors are coming out of this stock, and it's a similar move with Vestas Wind Systems listed over in Copenhagen. They're struggling with the competitiveness of the wind energy sector. They issued a profit warning this morning, missed their estimates. The stock down the most in almost 6 years. So some real trouble for individual stocks. If we look at elsewhere, though, oil approaching $57 a barrel, had a roller coaster of a ride yesterday. Today, though, we are approaching that figure. The focus is on US crude production. That's at the highest in more than 3 decades. And the pound as well, one to watch amid all the political and central banking action we're getting out of the UK, giving up the gains that we saw earlier on. Politics weighing on the monetary policy. The Bank of England's McCafferty saying that 2 more rate hikes may be needed to bring inflation down to the 2% target. It's worth noting, though, Ian McCafferty, the arch hawk of the Monetary Policy Committee. So not too surprising that we get this rhetoric from him, but the pound down into the negatives versus the dollar today.
Well, thanks for all these details and update from European markets. Moving on to commodity markets now, and demand for gold jewellery declined by 25% to around 115 tons in India during July to September quarter this year, compared to 152 tons last year. Demand for bars and bullions, primarily used for investments, also slipped by 23%. This data is revealed by the World Gold Council in the latest Gold Demand Trend Report. To discuss the report in detail, Somasundaram PR, Managing Director for India at the World Gold Council, joins us now. Thanks a lot, Mr. Somasundaram, for joining us. If you could tell us, why do you think GST was a deterrent for gold buyers, as you have mentioned in your report? What does your survey really reveals?
Well, you see, the industry is very large. It's got nearly 70% of the people in the unorganized segment. And by unorganized, what we mean is, people who probably may not have the computer systems, are not well integrated with enterprise solutions, all this kind of stuff. Compliance standards might just be linked to the individual working. So that is 70% of the industry. So and GST is a big transformation. It requires a lot of, what would I say, it produces traceability about where you buy and where you sell. So that we did anticipate that this transition to the GST regime in a complex supply chain like this with 70% unorganized players will cause some issues in the, for 12 to 18 months. And that's precisely what happened. The organized players have actually benefited immensely. You could have seen it from most of the listed jewelers as well. But the unorganized segment certainly did have teething problems.
Mm-hmm. So are these players actually able to cope up with GST at all? And then what's your outlook for the coming quarters? What happens to these people and what happens to the overall demand due to that?
our view is that quite a few of the players will probably raise the bar. They will adapt to GST. They will take their time, but they will adapt to GST. They will also have to see benefits in moving fast to this new GST rules, regulations, compliance standards, whatever. So we believe that that will happen. So it is not that the unorganized players will completely shrink, but the organized players will take a lot of market share. That is certain. But it will not mean that the unorganized players will go. First of all, we have to understand currently the state of the industry is such that it has already shrunk 21% compared with last year. There is a fall in demand. So within this, you see that GST has probably moved the needle in favor of the organized players. But what has happened to the demand is that it is going to come back because India, structurally nothing has happened to, reduce the demand from 850 to 675. So once that happens, even the unorganized players who have adjusted to GST will bounce back in a big way. Specifically, what do we expect in quarter 4? Quarter 4, we do expect the demand to be a lot more positive. The reason is, while yes, we have seen the demand in India drop 24%, imports are actually up 62%. So which means, and the market is still at a premium of $1 to $2. It is not at a discount. So that means that there is still optimism in the wholesale trade about the consumer demand. So given all these factors, we believe that quarter 4 and quarter 1 of 2018 will tend to be far more positive than we have seen in quarter 3.
The Money Laundering Act is another point that you have mentioned in your report. The act got modified actually. Maybe it's not captured in the data that you collected over the last quarter. But going forward, will it also help?
Yes, it will. We have stated that in our report as well that, prior to Diwali, obviously, the trade representations were heard and the decision was right about removing those controls because there were too many things that are happening. The industry anyway has been going through a spate of changes since last year, first quarter, with the introduction of excise duty, then the PAN card, and then the demonetization, then GST, then PMLA. So it was the right decision to allow the trade to probably operate Diwali without the restrictions of PMLA. And I think that has helped demand, and it will continue to do so. But more than that, as I said, there is also that underlying optimism about the trade, that's reflected in the wholesale segment, who have imported nearly 62% higher than last year, but it's not got reflected in the consumer demand. And the market is not at a discount. So, and this is a wedding season. So all factors seem to play positive. We've got to see how it gets reflected in the consumer demand. We are optimistic about it.
Mm-hmm. Let me go back to what you mentioned a little while back, that importers, the wholesale players are actually quite bullish. What is the reason that this segment is so bullish, despite retail demand being so tepid?
There is always a certain lag. It's never that what you see as imports immediately gets reflected in demand. There have been cases where demand is high and the imports are low because people do tend to dip into the stocks. So, but the question is, when you see this happening in the wholesale trade, it is one of the factors you consider, saying that market is not at a deep discount. We have seen discounts of $50 last year in July to September, but currently the market is at $1 to $2 premium. And the imports have been higher. In anticipation of GST, post GST, lots of reasons for that. Which essentially means that there is certainly the underlying activity in terms of fabrication, in terms of stocking up is high, and that tends to tell you that consumer demand, the pull will happen. There is optimism about the wedding season, so otherwise people wouldn't be importing.
Correct. Now, could you share your projections for the coming quarters?
Well, we don't give a quarter-wise, but for the full year, we believe that it will be about 650 to 750 tons for this year. The last year was 674. It will still be below the 5-year average, We have mentioned that, and we do expect this to continue. But 2018 will be, in our view, will certainly be step up towards that 5-year average. So you will see something moving up several notches. For the current year, it's 650 to 750, perhaps around the lower end or the mid range, given what's happening in quarter 4.
And why is the demand still below 5-year average is what your projection really talks about? Is there a medium to longer term trend maybe emerging here where people are no longer interested in gold?
Yes, we did some analysis some time back, econometric analysis going back to 25-year data and linking gold demand to how it has behaved in response to various factors. One thing came out clearly: increase in income is the prime driver behind gold demand. Then comes inflation, then comes gold price, and then monsoons. Okay, these are some short-term factors as well. So, but what we saw clearly was for every 1% increase in income, there is a 0.9% increase in demand. But for every 1% increase in price, there is only a 0.5% drop in demand. So that is, this is what the analysis showed. So clearly, income drives gold demand, because it's very clear part of the income goes into savings, a part of the savings goes into gold, and that is structurally the case in India for the households. So given what we are seeing, rural income being doubled by 2022, GDP growth, we do expect that these factors will be hugely positive for gold demand in the coming years. And we also have a lot of people actually entering the middle class. We do believe that given already the low per capita consumption of gold in India, this will be a big driver at the bottom of the pyramid.
Well, many thanks for joining us and giving us all these details. So what clearly World Gold Council believes, Navneet, is that there is lesser investable surplus in the hands of people who would have otherwise bought gold, and therefore there is low demand for gold. But if you look at the amount of money which is flowing into mutual funds, unless we are looking at a completely different segment of population buying gold, which is not at all interested in equities, then maybe we'll buy into this logic.
Actually, the holding in the physical assets, be it gold or even land, all that money has been coming into equity markets in the last 1 year. Okay, that's about gold. But moving ahead, video on demand is relatively new concept in India, but domestic production houses like Balaji Telefilms have already plunged into the video streaming space. And Nachiket, the CEO at Alt Balaji, believes that the need of the hour is to build a video bank in multiple regional languages. Speaking to Bloomberg Quint's Yatin Mota at the Axis Capital 2020 conference, Nachiket said the focus is on 4 regional languages right now.
So there are 2 or 3 strategies, of course. We will be producing all our content and own the IP for the content, and that consumer proposition stays undiluted. We will move into Tamil. We already have a Tamil show on air. We will start off with our first Bengali show at the end of November. It's called Dimaner Dinkal, and features Shashwata Chatterjee, who acted as Bob Biswas in Kahani. And therefore, basically the Bengali, Tamil, Telugu and Punjabi markets are attractive to us right now from an original content standpoint. We will also have by December end all our library in Tamil, Telugu and Malayalam dubbed out to consumers. In addition, from an international perspective, come April 1st, 2018, we will dub our content in Bengali and Bahasa to explore the international market also.
Talking about the consolidation in the industry, in general, we have seen a lot of M&A happen. For example, Zee acquired a lot of these digital platform companies, and a lot of consolidation in general is happening in the media and entertainment space, in the domestic market as well as in the global market. Especially, a lot of big players, are looking for content players. So, in that side, do you think any inorganic growth opportunity can come in for the company, or do you think it's too early to explore the inorganic growth opportunities?
See, a couple of things. I think the internet age in India has just begun about 2 years ago, and it is significantly expanding every day as we talk. Telco companies are giving off internet free. So we are in early days of market development and we have not even scratched the surface. I think there is about a 5 to 10 lakh crore investment in data that is being made by telcos, which is chasing a content pool of hardly 500 to 1,000 crores. And I think that gap needs to be filled in a significant way. And therefore, there will be a mushrooming of content of various natures for this. And therefore, at least our data on our apps seems to indicate a largely unfulfilled internet audience. They want more, they're seeking more, and our early findings are that Western models don't apply here. This, just making short series, people are saying, give us more of that. So we have greenlit 2 of our series for longer series going ahead. So we made Karle Tu Bhi Mohabbat, Ram Kapoor and Sakshi Tanwar, which was a 10-episode series to start with, but our second lot is a much longer and much larger play for that. So I think what we are seeing is the birth of a hungry pan-Indian audience, which will keep demanding more, and we will see a lot more investment in procuring original content. As far as the rights acquisition goes, both on the movies and sport front, you've seen high-value deals going for digital. That same kind of movement is not seen in the original space. We are right now, 60% market share in the whole production market, and I'm hoping that that market also burgeons to fulfill that.
Moving from media to core sector, it may not have been a great second quarter for Thermax, but a pickup in new orders and a growing order backlog have prompted brokerages to turn optimistic about the company after a long time. But where are the orders coming from? We asked MS Unikrishnan, the company's managing director. Listen in.
The current quarter is an exception for the entire industry because if you recall, at the end of June, the Government of India has very clearly mentioned that input tax credit will be available for another 1 more month or a grace period of 30 to 60 days for various industries except capital goods, which meant the entire month of July went for most of us to reset with the new GST and regime. And to be precise, predominant part of the industry started billing only by 3rd week of July. And the larger companies could only start it by almost maybe towards end of July. So there was a virtual miss of, I would say, a month for majority of the companies. If GSTN were not to be there in the current quarter, maybe we would have been up in revenues by at least 5 to 7%, as against a minus 6% which we have reported. Same is the case for everybody, barring maybe the construction-oriented engineering companies. That's the point number 1. On the order intake side is, I'm also seeing it across the country. In majority of the capital goods companies, we are seeing a minor uptick in the order intake. And I don't want to make a statement that things are totally turned around. But there are segments where the investments are happening without much of a difficulty. And this is a customer-facing industry or consumer-facing industry. Not much worried about what's happening to the country, the growth prospects and the commodity prices, etc. And I'm also seeing some positive movement in the cement industry. A couple of new projects being announced, orders being placed, and also the waste heat recovery based captive power generation picking up in that particular industry. That's overall take to talk about.
Sir, on the order side, so basically you're suggesting that some of the consumer-focused industries like perhaps auto or maybe consumer goods, there where capacity utilization numbers are higher, perhaps in some cases above 90%, that's where the inflows are coming in. And cement seems to be one-offs, right? Some regional players are adding a little bit of capacity.
That's correct, but I am also seeing a lot more of inquiries coming from the cement industry in anticipation of an improvement. But they are all looking forward to the government's new infrastructure push, which should certainly be benefiting both steel industry and cement industry. And normally, if they decide to put up a new capacity, it would take anywhere from maybe 28 to 36 months, which means a 3-year period for a cement plant to be ready to commission. So that's why many of them are looking forward to a consistent growth in the road building of the country, with Bharat Mala coming in and Mr. Gadkari committing almost 600,000 or 6 lakh crores of rupees for construction. So I think there is an uptick going to be happening in that industry. Apart from the ones that you mentioned about, I'm also seeing a good amount of movement in textile industry, alcohol, beverages. Pharma is also, despite whatever you guys may be worried about USFDA and the kind of share price movement, many who have developed their intermediaries and maybe out of the patent regime are also looking forward to expanding the capacity because medical consumption in the country is really going up. And food processing is another industry where I'm seeing, irrespective of whatever is happening to anywhere, anything to do with the economy, unabated investment happening and many more new players getting into that. Some small scale industry becoming medium, and medium guys are becoming fairly large in investments. So that dairy industry, there are 10 projects ongoing currently in the country. So like the way you mentioned about consumer facing industry, looking at the income generation happening and the growth happening at whatever level, people are investing in creating new capacity. But it is not applicable to steel industry, it's not applicable to oil and gas. I mean, power, just forget about it. So that's infra oriented, it's at a standstill, but other areas, there's a movement happening.
Okay, with that, it's a wrap on this edition of Countdown. Goodbye from Pradeep and my side. Thank you very much for watching the show. Coming up next is What Did You Miss?